Welcome back to another episode of That Backyard Property Podcast. You're here again today for another mini episode. Today, we're diving into debt recycling. The buzzword, everyone's talking about it. And debt recycling is something that's quite easy to explain and in some cases sounds too good to be true. This episode is completely general in nature, and I'd strongly encourage you to seek advice from an accountant or a tax professional because they're the ones that will advise you from a tax perspective. I'll be advising you today based on a lending perspective. So let's get into it. Debt recycling. What is it? In its simple form, it is converting owner-occupied debt or home loan that's not tax deductible into tax-deductible debt. The property that is used for this does not matter. So if you're living in your home, you can still do this strategy with your home loan. So it doesn't matter the property. So your current home loan is $500,000, which is great. You're thinking about investing in something, whether that be shares or property, but you're thinking about investing in an asset that's going to give you a yield or a return. And let's say you're thinking of using $50,000 from your own savings. In this instance, you've got $50,000 sitting in your offset account and you've got your $500,000 debt. What we're going to do is we're going to take your $500,000 and you're going to transfer that $50,000 in savings directly into the loan. So the loan balance is going to reduce to $450,000. And there's going to be available redraw of $50,000. We're then going to submit an application to a bank, and whether that be the same bank that you're with, which is possible, or a completely different bank, either option works. What we're then going to see is in the new loan structure with the new bank, your owner-occupied home loan is going to have a balance of $450,000 and you're going to have a second loan of $50,000. Now that $50,000 is literally the money you've put into the home loan. So it hasn't been used. So that $50,000 loan is going to have that $50,000 you've used in the offset account against it. So you're not going to be paying any interest on that whilst the $50,000 is in the offset. Now, using that $50,000 to invest, as I said, in shares or property or whatever the investment strategy you want to take, but that $50,000, because you're going to be earning a yield or a return from the investment, should now be tax deductible. As I said, general in nature, seek tax advice, but in most cases, this will now be tax deductible. So that debt of $450,000 is still your home loan and it's not tax deductible. However, that $50,000 is. So you've just recycled that $500,000 home loan over here to $450,000. The beauty of doing this is that you've reduced your home loan, but you can do it again and again and again. And the aim might be for some people just to pay off your home loan, which is fantastic. So you might not want to do this and you just put your $50,000 in and you keep paying down your balance. For other people, the goal might be to pay that $450,000 down to zero whilst increasing the investment debt up to $500,000, back to the original amount. The best part is that $500,000, if used for investment purposes, should now be tax deductible. So it doesn't matter what property you're using, whether you're using your home or an investment property, you obviously have to own the property that you are using, but it can be used on your home. And so whenever someone is talking about debt recycling, that is what they're talking about. So rather than using that $50,000 and buying shares directly from your offset account, they're actually converting the debt, then using the $50,000, but being able to claim the interest that is being charged on that $50,000 on this part here to reduce the taxable income or reduce the rent or yield they're receiving from that investment. So a fairly straightforward process from a lending perspective, but I'd strongly encourage you to seek tax advice because that is the key to it. And what I find is if you've got a really, really good accountant or tax advisor and a really good broker, then they can link together and make sure that the loan structure meets the tax requirements. So go out, speak with your accountant, speak with your broker, talk to them about this if you are thinking of investing, because it can be done. It's straightforward from a lending perspective. If you have any questions at all, reach out. I'm so happy to help because I feel that the more people that understand and know about debt recycling, the better. And the more people that are asking questions about this, the better, because we're trying to educate, inspire, and empower people. So thanks so much again for listening. I love being able to talk with you through this, even though I am sitting here talking to a camera, so I can't actually see anybody. But thanks for listening, and I can't wait to see you again next week. Cheers.